Hello everyone, it is Red with RedDragonLeo.com. It is Tuesday, January the 8th, 2013. I've already did one video about Allie's post, trying to help you figure it out. This video is just going to be about the technical analysis of what I see in the charts coming up next week and over the next few weeks and into February. So if you haven't already watched the other video, it will be entitled The Study of Human Consciousness and How the Stock Market Works with It. The video I'm doing now is going to be titled this: The Final Top in Stock Market for the year 2013 is likely to happen within a week. And I'm going to look at the technicals to give you an idea on that so that we can hopefully pinpoint this thing. So let's look here at the charts of the SPX, and this is dating back. Actually, I set it for 10 years, and I wanted to go back to see where a possible upside target is. So I drew these lines here from here, which is 1499.39. Obviously, that could be drawn off just a little bit. Let's just round it down to 1499. If I look over here in this area right here for the actual high, it says high, and you actually go over there to that, getting that very date. It says 1498.95. So 1499. So approximately 1500. And that's one of the reasons I said in this post I think that we're going to fall short of it. I don't think we're going to hit it. Then if we do hit it, I think it'll carry into next week. If we go past it, if we hit the 1500, we'll go past it most likely and try to go on up there to hit this 1520 area. And that is from a line right here. It's actually slightly a little higher than that. Let's see, it is 15, what is that actual high there? 1510. Well, I don't know why that line says 1520, but it appears to be right there. And so that would be my target of 1510 to 1520 area, should we actually manage to pierce that 1500 and go through it. And if we go through that, then obviously we're going up here to 1550 and then 1565, and then obviously putting a new all-time high. I don't see that happening, guys. We're very, very, very close to rolling over. They're really extending this out a lot further than I thought they would, but it is what it is. It's how these gangsters roll. They refuse to let the market go down. Let's zoom in a little bit on the charts here. And this is a line that I drew right here that I think is the most likely target of where we're going to hit. And I know there's a lot of lines on these charts here, but let's zoom in again and keep going here. Okay. So this line here, as you can see where it's going, it is continuing to go up. And if we turn and go back up tomorrow and go back up here to these highs over the next 1 or 2, 3 days, we very well could go up here. If we stretch this out to 1, 2, 3 days off to the corner here, so it's 1, 2, 3 bars, this could easily be pointed at 1480 to 1490. That's one of the reasons I think that is our final upside target, and I do believe that's going to be the high for the year. I don't think they're going to get back up to it into August later this year, as Ali posted in his sacred geometry post, I guess you could call it that, laws of harmonics and vibrations, octaves, which it's new to me, and I hope you guys are enjoying it. And it's been 2 posts with him, but it's something I like to expand my knowledge, and this is something that is very, very interesting, how these octaves follow, waves of time periods, I guess you'd call it. And it's similar into how we look at the daily chart, weekly chart, and monthly chart, and then the lower time frames to try to figure out when the market is going to move and turn. So down here, if we actually go down here in the right-hand corner, and down in this area here, you're going to see we're up here above 10 on the MACD line, 10.8 looks like, and then this one here's 7.7 or something like that. So they're too far apart. The trend is weakening. There's no question about it. I do believe we're about ready to roll over, and I think this is going to just roll over the next. So if this is 1, 2, 3, then we got maybe 3 more days before we peak and roll over. These bars should actually get lower as we go up higher. So this should probably kind of curl over and flatline as we do run up, or just maybe this red line runs up here and gets real close to this so that it'll cross over. But these should be going on weaker volume, because honestly there's no bears left up at this level. The only bears are above this 1470 to 1475 area, where they put in stops back here, back here, back here. And I don't think that there's a lot up there, simply because of the fact of how long was up there. I mean, literally here we had a topping tail. We wasn't up there but one brief day. Here we never even made it up there. Here we made it up there one day. And then the rest of this stuff here in this zone has already been taken out. You got to understand that this level right here is 1460. Well, look where we went. We took it out with this bar, this bar, this bar, this bar. So we've had 1, 2, 3, 4 days to clear out this zone right here of bears. So the only people left are the bears that put in from this very high here, and then this high right here. And these are topping tails. They couldn't have put it up they couldn't have put their stops up there very high, I don't think. I think the majority of the bears have already exited, squeezed out, closed out their positions. It really wasn't squeezed, but if you want to call it that, their buy stops were hit in this area. Hit here, they hit all these ones that were here. So I really don't think there's any bears left to squeeze to make the market move higher. They don't have enough money to keep it going. I definitely think that they're out of money here. It's quite obvious. We have QE3 in the market from last, September, something, when Bernanke put QE3 in, said it's $40 billion a month with an undetermined time period. They need to keep doing it. And then they secretly did QE4 with this, I guess, this physical cliff nonsense or whatever. So I think we get at least 2 QE programs in the market. No, that wasn't QE. No, this would be like QE5 if you want to call it that. They had one was QE4. It was in December or something. So the bottom line is they're getting less and less and less of a move up from each and every QE program. The very first QE program back in 2009, right after the March low of 666, man, that one lasted a year, and then the next one maybe 8 months or something. These QE programs. So now they're not lasting a month, 2 months, and they're running out of steam. So here we are at that situation where they actually got more money in the market and they're getting less of a move up. It is literally like pushing a snowball up a mountain. And as you push it up the mountain, not only is the mountain getting steeper and you don't know where the top is because it's night and you can't see because of the sky and it's snowy out, but the snowball is getting bigger as you push it up because you're rolling it. So that means the debt is getting bigger. It's taking more and more men to push it up, in this case more and more money to push it up, and you're not getting as far because the men are getting exhausted, or in this case the money is running out and there's nothing left to keep it going. So this tells me that I really think this is going to be the top for the year. I don't think we're going to get it back again in August. I think they'll run it back up in August and top it out lower than what we're going to get here. But first we got to worry about the sell-off that's coming. That's what we want to try to capture. So I want everyone to draw this line on your own charts right here and look at it, because I definitely think this is where we're going to go. I have no way to count this wave right here. I mean, obviously it looks like a massive wave 3, but it doesn't really jive with this other stuff here. I mean, if this was a wave 1, a 2, and you know, maybe that was a 3. Maybe this is a 4 down, a crazy 4, and maybe that's a 5. I don't know. You just can't really count it very good. You know, maybe more likely this is an A and this is a B and this is the end of a C. Again, I don't pay a whole lot of attention to Elliott wave if it doesn't jive up with the technical analysis, and this one does not jive. You know, it's the first time I think I've said the word jive since the 70s, so it's taking me back. I don't know why I said that, but anyway, so forgive me for sometimes losing my mind. After all, you are on the dark side now, in the twilight zone, when you're watching my videos and reading my blog. So let's look at the shorter term here, guys. Let's go down to the 60-day chart. You can already see it's ready to roll over here. 60-minute chart, I drew this nice little falling bullish wedge. We come right up to it right here. And if we want to zoom in on it, here's that same line right here. As you can see, it's going up. If we run this thing up, we could hit 1480 to 1490 if that continues on up over the next couple of days. Let's zoom in a little bit on this, but wait a minute, before we do, look at this. Down, getting ready to curl up. See how it's getting ready to curl up like this? This tells me they spent this time period, this whole time period of chopping sideways and allowing this chart to work itself from massively overbought down to being neutral. It's not really oversold, it's just neutral. Oversold would be, you know, down here at negative 7.5. But they can easily curl this back up and come up here and put in a lower high. So I don't, you know, they're not going to get back up here to 10, of course. They shouldn't. But they could get up here to 5 or 7.5 and then roll over. That puts in that lower high. The market actually goes higher. That's where you get your negative divergence. Look at this on the 2-hour chart here. And you can see it here on the 2-hour chart as well. You can see they are going down here. And I don't really think this one's going to necessarily go down here to 0 and curl up. I think it's going to probably start to curl up right here and just kind of whip itself back up a little bit here, curl a little, and then follow a line. If you drew a line right here, it'd probably come up, maybe hit this 7.5, maybe 6. Depends on how many days, how many 2-hour time frames it takes to get there. But again, all while it's doing that, this is popping up and going higher. And let's go into a smaller time frame again, and we will see these lines right here. And you can see how it's following this all day today, and they have put themselves in a pickle. Literally, they've boxed themselves in and forced themselves to either drop back and retest this line here from right here, which is approximately the same low as here if this gets stretched out into tomorrow. So that's possible. They could drop back and put in like a double bottom. You could call that the 5th wave down if this was a wave 1, a 2, a 3, and this is a 4, then, you know, a 5 in Elliott wave, just 5 waves. It doesn't necessarily have to do that. They could just gap it up over here to get above this line right here, which is, you know, I'm zooming in here for you, but you can see how that was a channel, a nice channel. And when we went down here, it looked like we was going to break. What they do, run it to the close, and bam, they run right up against that resistance. So they do follow these trend lines up and down, folks. And so we're coming to a head to where I think we're about ready to pop out and curl up. And you know, we could drop down here again. Again, there's your wave 1, sideways 2, 3, 4. We could drop down, maybe retest this area here, or just test that right there, and then go back up. That's possible. Extend it out a little further, but I'd really rather see them get it over with, get the gap up, and let it run, and end this thing by Friday. Make this thing run, get it up there, and hit that area, hit that zone that I'm talking about, which is this line right here, 1480 to 1490. I'd like to see that by this Friday. If we don't, if they drop this down and keep chopping around, we're going to get pushed into next week, folks. I'm afraid. So that's it. I'm out of time. Be sure and read the blog, guys. See you guys.